Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-hosts, Mark Hanf and Nam Phan of Pacific Private Money and Rob Spinoza of Guaranteed Rate. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tambella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And a special trivia question where the winner will receive a $25 restaurant.com coupon that can be used at hundreds of restaurants. And actually, this is our second show on KTRB 860 The Answer. And for those not familiar with our show, imagine a bunch of guys sitting around a bar having drinks without the drinks, talking business with and real estate, and you, the audience, are listening in. Today's trivia theme is TV shows from the 1970s. I don't think, Rob, you were born then, were you?
I was born.
You were born then. Okay, you're a young stud. All right, Rob Spinoza of Guaranteed Rate, take it away.
Well, I was going to laugh there. You were saying, a bunch of guys sitting around a bar without the drinks. And I'm like, without the bar either, right?
Yeah, COVID, yeah.
Without the bar, with masks on and a hole for the drink.
I don't want to make light of that. That's for sure. I mean, certainly a lot of people, suffering with that, and that is a huge thing. I hope turns around and gets better. But what I wanted to point out to kind of kick off the show, you guys are probably aware of this, even though you're in private money, I'm in conventional lending. But recently, and for 2021, we are going to see the conforming loan limits increase again. Not sure if you guys are familiar with that, or if you want me to discuss that a little more. But I see that as an exciting change, not only here in the Bay Area in California, but also across the country, because these numbers are really starting to align with, I think, a very brisk real estate market in lots of parts of the country.
Well, it makes sense. I mean, how long has it stayed at, what was it, 617?
Well, yeah, I mean, even in the last few years, good point. 636 was the jumbo conforming limit here in Marin County, for example, San Francisco. It is now up to 822, 375. And yeah,
wow.
They come up with these numbers with that. But 822 here in the Bay Area, I don't know about you guys, Mark, but this is really starting to align with our natural median price points, which is a welcome relief. I know we don't get a lot of from the rest of the country about our high loan amounts and our high property values, but the Federal Housing Finance Authority is I think they're spot on about this. I think it helps a lot of borrowers.
Well, and it's about time that California and New York got a little break in the action here, because in the last 4 years, the Trump administration, even though they reduced taxes and provided a number of business incentives and tax incentives, the government really stuck it to the left coast and the right coast in that, it eliminated for the vast majority of us the effective mortgage deduction, because our mortgages are so high. And so having at least a little catch up here on this is actually really good. That just means that more and more buyers in the Bay Area and in California will qualify for the creme de la creme loan programs, and that's only fair.
Yeah,
Rob, when does this kick in?
Well, we've got it live right now at Guaranteed Rate. We are locking loans on those new limits, but in general, the idea is they will be available everywhere in 2021. And what makes that what makes the conforming loan limit important is it frees up the down payment borrowers, the people who have less than 20%, because now they've got access to, like Mark said, a great program at great interest rates with a lower down payment. And this helps the first-time buyer. This helps the move-in, the startup buyer, and it helps other people move up and out into their next home, which is part of the healthy life cycle of home ownership. So I see it as a real plus, and I think that coupled with low rates really bodes pretty well going into 2020. And despite all the challenges that we have in the broader economy, despite all the challenges individuals have in certain industries, I think real estate's going to look pretty strong going into 2021. I'd be curious to get your thoughts as well.
Well, especially if interest rates stay low, which they look like they will.
Yeah, absolutely. Well,
yeah, I agree with that. I agree with that.
At Pacific Private Money, in contrast to your company, Rob, we have a consumer bridge loan that helps people capture property that haven't quite lined up everything yet for their stellar financing. And so we like the idea of having more and better programs available as an exit strategy for our consumer bridge loan. We're constantly, every week we close another 2 or 3 of these consumer bridge loans to anyone from first-time home buyers or buyers who, just didn't want to sell first. But having a good exit into a conventional program like you're talking about, that's just good for everyone, and it's good for the industry. And real estate being one of the more important industries overall, because it's so tuned to people's personal wealth and health. This is just good news.
Hey, so you guys, Mark, you mentioned the consumer bridge loan. So you're seeing that in the case where the buyer wants to purchase a new home, they can't sell their existing one beforehand, and they need to grab that equity and apply it to the purchase of the acquisition of the new property before selling the original.
Yeah, well, that's one of the many reasons. Sometimes it's just they want to buy now. They've got an opportunity to buy now. Maybe they've got gift down payment from relatives. We're doing it for young people who don't quite qualify yet, but they will within a relatively short period of time, within a year, 4 months, 6 months, 8 months. They're working on being able to qualify. Maybe it's a seasoning issue or a reserves issue. There's a lot of issues where we help people capture that property.
Or maybe it could be that they just want to purchase a property really quickly because you can close so much faster than a typical bank.
Yeah.
Very good.
Yeah,
hey guys, we're going to go to our first commercial break. When we come back, one of the emails that we received has to do with choosing between a 15 and 30-year mortgage, which I know Rob Spinoza is going to give us some advice on. So first trivia question. Up your nose with a rubber hose was one of the many sayings that made this show popular, especially with teenagers. When it debuted in the fall of 1975, I'm sure we all remember this one well. Name that show, all right? The first caller with the correct answer is going to win the tanning certificate, which is worth over $100. Call 888-912-1190 to answer this question. Up your nose with a rubber hose was one of the many sayings of this popular TV show. Name the TV show when it debuted in 1975. Stay with us. You're listening to The Best of Investing. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here along with Mark Honfen, Nam Phan of Pacific Private Money, and Rob Spinoza of Guaranteed Rate. First trivia question. Up your nose with a rubber hose was one of the many sayings of this popular TV show. What was the name of the show?
Welcome back, Connor.
That's right.
Oh, that's
very
right.
good. So,
I was going to say Happy Days.
Mr. Cattell.
yeah. Barbarino. Remember that?
I do. That was a great episode.
That was funny. Okay. Rob, an email comes in from a listener that says, should I refinance with a 15 or 30-year loan? What's the
Good question. It's a question we get all the time, and my response to that is it depends, and it depends on your own situation. So 15-year fixed, if you're lucky and if the rate sheet is strong on any given day, should be about 0.5% better than a 30-year fixed. So if you go into a 15-year, you should see a clearly defined rate benefit. And that would be the only instance where I would suggest you do a 15 over a 30, because if you're not getting the rate benefit, it might be smarter to take the longer term and just pay it in advance and have the flexibility of making the lower payment. Now, the 15-year fixed, obviously the goal is to pay off the house faster. So if you're going to decide to do that, make sure that that financial objective is one that doesn't make other financial objectives impossible, meaning saving for retirement or other things you need to do in your life instead of or in addition to paying down the house. So 15-year fixed loans, I think, are good for people who are nearing retirement and will have the loan paid off before they retire, and who are already retired and can comfortably pay off the house with the higher payment. But I think for younger people who are just kind of starting their financial life and have a lot of other financial objectives, saving for retirement, maybe saving for kids' college, then I think the flexibility of a 30 is better, and they can always pay that 30 as if it were a 15, and achieve a lot of the same goals, but have the flexibility of having the lower payment. I will add one other element to this. Real estate investors I think should not go into a 15-year, because their credit is often, when they go to invest in other properties, lenders pull their credit report, and that higher payment on a 15 can prevent them from making the investment they would otherwise want to make. So having a 30-year payment on their credit report, again, gives them flexibility. They can always pay the loan faster if they want, but their creditors will see that lower payment and calculate it in their debt to income.
With some business loans, though, they have to be kind of careful of the prepayment penalties, but you're usually allowed to pay up to what, 10%?
Sure.
You know,
Sure.
without a penalty. So that's something to consider. Rob, how do people get hold of you?
I work for Guaranteed Rate. My office is in Marin County, but if they look up, they can look up Rob Spinoza on Yelp. They can look me up on LinkedIn. They can Google search mortgage lenders in Marin County, and I'll be happy to help out.
Very good. Thank you very much.
Yeah.
Mark, an email comes in for you guys, Mark and Nam. Can you give me a rundown of your 4 funds? Because you have more than one fund to offer.
Well, for our new listeners at Pacific Private Money, we serve 2 clients, separate and distinct and unique. We are a lender, an alternative finance provider, sometimes called private money, sometimes called hard money. So we serve borrower clients who are looking for fast, reliable financing for their home or investment property purchase. We also do commercial property loans and ground-up construction. And we're the guys that you can go to when you absolutely positively are relying on getting financing. We're so much faster than the banks. But of course, we're not quite bank financing, so those who can get bank financing should get bank financing. But there's a lot of reasons why borrowers can't get bank financing, and it's usually related to speed, and that's where we step up to the plate. All of our loans, 100% of our loans, are funded via private financing. Much of that financing comes from Bay Area individuals who have invested in one of our 4 distinct and unique mortgage-backed funds. We also still work with some individual investors who like to do what's called trust deed investing, where they invest directly in the note, but that's actually becoming a little bit less, well, it's not less popular, it's just less pragmatic now that companies like ours have so many other resources where we can sell our loans to, including our captive funds. And so for investors who would like the opportunity to enjoy higher yields, anywhere from 7, 8, 9%, possibly even higher, while being invested in a real estate-backed vehicle, but don't necessarily want to have to be actively involved in the management, that's where we come in. We've got 27 people on our team at Pacific Private Money. We've got 4 mortgage pool funds, including our legacy fund that we launched in 2013. We've done nearly $1 billion worth of privately funded loans over the last 13 years across 2,000 different loans. Average loan size is nearly $1 million. And so those 4 funds, the Pacific Private Money Fund, the North Star Capital Fund, the Pacific Freedom Fund, and then our newest, the Pacific Southwest Fund. All 4 of those funds are detailed and highlighted on our website at pacificprivatemoney.com. That's pacificprivatemoney.com. But all 4 of them are similar in that they are all backed by mortgage-backed loans. That's what each of those funds contain. Again, for more information on how you can invest with us and what the differences are of those 4. If we have some time, maybe we'll circle back towards the end of the show. Yeah. I know we want to share some good information about what's happening in real estate in the Bay Area for those who aren't glued to the newspaper every day and can get away from COVID and political news. And we tend to avoid that here, and we scour the internets for the latest and the greatest on what's happening, mostly residential real estate. And again, that's where we specialize in, is residential real estate, which as a market has survived quite well. In fact, has thrived in the last 9 months that we've been in, shelter in place now for the second, if not third time, and lockdowns. Residential real estate, residential mortgage market, the financing market, the investment market, anything residential has done fairly well in that market.
All right, we'll come back just a minute. Here's our second trivia question. Which popular cop show that ranked number 5 for the 73-74 season featured the memorable closing words, "Book 'em, Dano"? All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Again, which popular cop show featured the memorable closing words, "Book 'em, Dano"? All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, along with Mark Humph, Non Fon, and Rob Spinoza. Second trivia question. Which popular cop show featured the memorable closing words, "Book 'em, Dano"?
Hawaii.
Hawaii 5.
Hawaii 50.
Very good. For Hawaii 50. Okay. Rob, you got a couple of news articles to share with us?
Yeah, I got a few I wanted to go over, but I was thinking of something we covered we touched on in a previous segment. We were talking about people buying homes, and this is a unique time of year. Edward, you have a tax background, so you might find it interesting.
Yeah.
But with the IRS annual gift exemption, what is it, $15K per person?
Yeah, I haven't looked it up. They keep changing it all the time, but okay.
Yeah, so I think it's still $15K per person. But if you're a home buyer right now, let's say you have generous parents and they each give you $15K. That's $30K that they can gift without any tax ramifications.
And if you're married, they can give it to your spouse too. So
right.
Go ahead.
And if they cross the year, they can do it twice. So in our example there, if they went 15, 15, 15, 15 for 2020, January 1st, they could do it again.
That is correct.
And now, yeah, you could get $120K worth of gift and not go, touch that. So anyway, this is the one time of year where if you're a home buyer, you're crossing from one year to the next, and you plan to buy in early 2021, keep that in mind. And
also, you know what? It's funny. Something that everyone always seems to forget. It's not the recipient who pays the gift tax. It's the donor. Right. And then there's also the unified gift credit. So in theory, it goes against the credit that you'll have eventually when you die.
Right.
Unless they get rid of it. So it's not like as soon as you give too much money, you have to pay taxes right away. It goes against that eventual credit because people always get kind of scared about that. But just late December.
We were talking about down payment requirements before, and so many buyers. Mark, you mentioned all cash. On the other side of that spectrum are the people who don't have really any of their own money and are getting gift from a family member, and that is the limiter in their ability to purchase into the market. And so now they're at this time of year where they could maximize their potential to get a gift and help them buy in an area like ours where, even the minimum down payment requirements can be a lot of money. So anyway, I was going to say before, we are in the middle of a refinance market that has persisted throughout the year. It was brought about by the Federal Reserve's actions when the economy shut down due to COVID, and their aggressive policy towards keeping interest rates low. And so, as you comb through the news, you see even people like Warren Buffett are advocating, hey, if you've got a loan, be thinking about refinancing that. Certainly there's been a lot of interest in refinancing, and rates are, for the most part, for well-qualified buyers, 30-year fixed rates are trending under 3%. So even those people who have a very good rate already, 3.5%, 3.75%, rates that they got last year and before, they might want to look at their options here at the end of 2020, early 2021. Nobody knows where things are going to go in 2021. We know it's going to be a very dynamic year. It has to be because of all the things that are in play. But if you've got a loan out there and you're thinking about saving some money, I think that Black Knight found that 19.4 million homeowners are high-quality refinance candidates, and that they can save an average of $309 a month. So that's real money for most of us, and it might be available for you even if you have a great loan already.
Hey, Rob, that's great info. Real quick, going back to the gift, how does this time of year affect it? Do you have to, as a borrower, start applying for a loan right now in order to take advantage of that, gift for 2020 and 2021, or how do you affect that?
Yeah, that's a great question, because if you're looking to buy a house, you might not be in contract yet. So how do you know you're going to need it? Yeah, and so that is the risk I guess you take. But if you get a gift, in 2020, and then you get another one in 2021, and you end up buying in, let's say, January, February, or even March, those funds are all readily available to you. They're easily documented, and then there you go. Whereas if you try to buy in late 2021 and you didn't get the gift in 2020, then clearly the donor has something to consider, like Edward had mentioned.
Got it. Okay, interesting.
All right, Nam, you got a deal of the week for us.
Yeah, so a couple deals of the week. This one is local to Marin. We had a home buyer who was actually living, this is probably qualifies as the shortest move in PPM's history. This is a buyer who was buying one story down, I think, or buying from an apartment that they owned, but was moving to a ground level so that they could avoid stairs. So it might have been like 100-foot move or something like that. But essentially, they came to us because a couple of things. One of the caveats was they weren't allowed to purchase within their unit unless they had all cash or only after they sold the existing unit that they lived in. On top of that, it was a co-op, and so we broke ground on several fronts. This person needed a bridge loan essentially because they wanted to buy that lower unit first before selling their departing, and we provided them a bridge loan. It was only for $400,000, but we were able to do this transaction, and this one closed, I think, just a couple weeks ago, if not maybe last week. So anyway, that was one, and the other one was a family or a couple, retirees who were buying into a community and essentially needed the funds, the entry fee. So this was a community that you don't actually own the real estate in, but is one that has all of the amenities, and it's a high entrance fee. In this case, it was $500,000. But again, they had all of their equity in their departing residence, which they owned free and clear. So we were able to make a loan for $500,000, which was actually the entrance fee into the senior community. But we only took a first on their departing residence. There was no cross-collateralized loan. We were just providing essentially a refinance. So for us, that loan to value was 29%. They owned their Santa Barbara property free and clear.
Perfect.
They just needed the funds to cover the entrance fee.
How do people get a hold of you if they need quick financing?
They can call us, 415-883-2150, or go to our website, www.pacificprivatemoney.com.
All right, here's our special trivia question where the winner is going to get a $25 restaurant.com coupon. For the 5 seasons this show aired, the lead character always received the same greeting whenever she called down to her drunk-sounding doorman, who was heard but never seen. Hello, this is Carlton, your doorman. Name this spin-off of another TV classic. That is our special trivia question. 888-922-1190. First caller with the correct, actually the third caller, let me correct that. The third caller with the correct answer is going to win that restaurant.com certificate. Stay with us. You're listening to the Best of Investing, and don't touch that dial. We are going to be right back. Well, welcome back to the Best of Investing. One more time, I'm Edward Brown, along with Mark Humph, Nam Phan, and Rob Spinoza. Third trivia question for the restaurant.com certificate. Third caller with the correct answer was going to win that restaurant.com coupon. And here was the question. For the 5 seasons this show aired, the lead character always received the same greeting whenever she called down to her drunk-sounding doorman, who was heard but never seen. Hello, this is Carlson, your doorman. What was the name of that show? Rhoda. It was a spinoff from the Mary Tyler Moore Show. All right, Mark.
Rhoda, you watched every episode.
No, actually, I don't think I saw one. So I didn't get the answer to that, correct that one. Mark, you wanted to share a couple articles?
Yeah, well, some headlines from the news this week. Fairly consistent. You know, a lot of real estate investors out there keep waiting for the market to turn in a direction other than up. And for the most part, real estate investors missed out on what was predicted to be, you know, a pretty, you know, among some predicted a pretty serious price adjustment back in March, April when COVID first hit. Of course, that didn't happen. Here we are, it's December, end of the year. We're looking ahead till next year. The predictions across the board, for the most part, are really that the market is going to be flat or appreciating. Very few are predicting a market correction or crash. There's some concern about whether foreclosures will be up, especially since a lot of programs are expiring, a lot of protective regulations that have been enacted in emergency this year. They're set to expire come January. But I think you can believe with an incoming Democrat president that we're probably going to see the extension of some of those protections. So really, some of the economists that we read and listen to and follow, are not predicting that, notwithstanding higher unemployment, notwithstanding, those who may find themselves in a notice of default situation, the fact of the matter is that equity is up, prices are up, and the amount of equity that people have in their homes is so much higher today than it was when the market corrected in 2007, 8, 9, that you just don't have houses underwater. They have options. They may not want to sell, but if they have to sell, they can sell, and put some money in their pocket so they don't completely, lose everything. So home prices are up in the Bay Area. We've been saying that pretty much every month. Single-family home sales for October up more than 20% unit volume. So there's a lot of activity going on, buyers again, they're still for the last 6 months they've been looking for extra space in homes, offices, home offices, backyards where they can hang out during shelter-in-place protocols. So it's really, sales are strong except for the condominiums. That's the area where if you're looking for maybe to buy real estate on sale in California, the only real estate on sale right now arguably would be the condominium sector.
Vertical living.
Yep, that's right. Also saw a stat here, 24% of homes sold this year were bought with all cash. Now that's a nationwide number. And what was noteworthy about this article is that at 24%, that's the lowest percentage it's been in 13 years. Wow. Apparently it was at a high in 2013 nationwide where 34% of homes sold were being sold all cash. Of course, that was at the height of the foreclosure purchasing opportunity for those of us who remember that well. In the Bay Area, though, that number really escalates at a lower spectrum. Between 15 and 20% is the average cash home, but that's still a significant number. And so if you're dealing in a market, in a niche market in the Bay Area, you're looking to buy a home in a suburb, say, of Marin or Silicon Valley, San Jose, areas of Oakland, Berkeley, even Sacramento's pretty hot right now. You're competing with those cash buyers. So that's another reason why at Pacific Private Money, we really are yelling from the rooftops and the mountaintops to all of the realtors that will listen, saying, hey, if you can help your client buy that house by competing with cash buyers and competing with buyers who are offering fast closes or low or no contingency by using a consumer bridge loan, that is an amazing product, and it will help you as a realtor close more deals for your buyers and even find more listing opportunities, find people who feel like they're trapped in their home because they think they have to sell first to free up that down payment. So we can help in those regards. So again, for more information about our unique consumer bridge loan product, we're one of only a handful in California that are offering it, and we believe we are the biggest lender in California for these consumer bridge loans. We did quite a few of them this year, and we're going to do a lot more in 2021. But for more information, call us at Pacific Private Money, 415-883-2150. Just a couple more stats just for the heck of it. 40% of homes that went under contract had an accepted offer within the first 2 weeks while on the market. So well-priced, most well-priced homes are just, they're flying off the shelf. So that really tells you supply and demand is still at work. Low supply, high demand. Also, the average sale price to list ratio, this is the final one, Edward, which measures how close homes are selling to their asking price, rose to 99.5% last month. That's an all-time high.
Well, I heard over the weekend that someone was going to suggest that Governor Newsom,
Governor, the Gavinator?
the Gavinator, that he get Realtor of the Year for producing all.
So if you're going to get your price 99.5% of the time, just charge whatever you want.
Yeah, that's right. I wonder, the all cash stat that you gave, is it because the Chinese money that came in before has been all spent? Because that was one of the main reasons that there was so much.
Well, it's funny because we lived through the 90s where it was Japanese money coming in, buying up a lot of real estate, a lot of it commercial real estate. And then the Chinese money was actually several years ago now. It hasn't really been a thing recently, as far as I know. I don't know, Rob, if you've heard otherwise, but I think the vast majority of sales happening right now are Americans making a move, transitioning, and millennials are in the marketplace. I don't know how your loan volume is increasing due to millennial activity, but they're finally getting tired of their mom's basement and they're out there
saving all that
competing
cash.
for homes.
They weren't paying all that rent. I know my
but
son
you
was
also-
one of those.
But they've also detached from the geography. So now a millennial doesn't have to buy in San Francisco and pay $1.5 million. They can buy in South Lake Tahoe. They can buy in the foothills. They can, because they're not attached to the geography, and that has opened up price points that previously weren't available to them.
But I think that's going to change.
Yeah.
Eventually, either vaccine or whatever, people are going to start moving back to the city.
Oh, I agree with that too.
Making them come back. Yeah. So
I agree.
Yep. All those people are either going to start selling those second homes, or they'll keep them as second homes in Tahoe. Or they may be forced to sell them to come back. It'll be kind of interesting, but you know what? As long as there's activity in the market, it's good for everybody. That's really what it comes down to. All right, no trivia question, but when we come back, Mark, I wanted to fill us in on the other couple of funds that you didn't mention to begin with. All right, stay with us. You're listening to The Best of Investing. We're going to be back with some closing comments. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn from Non-Fund of Pacific Private Money and Rob Spinoza, Guaranteed Rate. No trivia question, but Mark, finish up with a couple of the other funds that you have.
Well, I thought I mentioned all four, but we have 4 mortgage-backed funds at Pacific Private Money that offer above-market rates for you to invest in for your consideration. Our Pacific Private Money Fund, which we launched in 2013, has been paying a steady monthly distribution in the high 7% range. I think we're going to end the year somewhere between 7.5 and 7.7. Then we've got the Freedom Fund, which pays a flat 7%, and that's designed to be a liquid fund in that there's no hold or lockup required. You could park money in there for 30, 60, 90 days. Maybe you just sold some real estate and you want to be able to keep it relatively liquid. We use that money there to fund loans that we're going to sell right away. We treat it like a warehouse line of credit that we clear every 30 days. The third fund is the North Star Capital Fund. That has a preferred return of 8% with a target yield of around 10. That fund is dedicated to construction loans, California construction loans, mostly single-family residential, a lot of fire rebuilds. If you want to invest in something that you can feel very, very good about helping rebuild California, we're making loans left and right. We're running circles around the banks. They just can't keep up with the demand, and we're filling in that difference. And last but not least, we've got what's called the Pacific Southwest Note Fund. That's a rather unique fund that invests in Texas seller carryback notes that we purchase at a discount. The preferred return on that fund is 9% with a target yield of around 12. And so a mixture from, well, we think all 4 funds are relatively conservative, but there are slight differences between all 4, and which one might be best for your consideration as a way to diversify from, say, stocks and real estate and other types of investment activities. For more information, you can see all 4 of these funds side by side in a column grid at pacificprivatemoney.com. That's pacificprivatemoney.com.
And as a reminder, no load going in, no load coming out. There's just a 1-year hold on 3 of the funds and no hold on the other fund. You do have to be an accredited investor, which is net worth of at least $1 million exclusive of your home, or income of $200,000 if you're single, $300,000 if you're married. Rob, any last words before we cut out?
No wisdom at the end of the year, but everybody please stay safe. Holiday season, we're not out of the woods yet, and let's all hope for a brighter 2021. I mean,
yeah,
tune in next week. We'll have all of our first of year predictions, right, for 2021.
That's right. Yeah.
Yep.
Interestingly enough, this 2020 Pacific Private Money, you guys actually had your best quarter last quarter.
Well, we've had our best year, so we had a growth year over year. 2020 was better than 2019, so we've been one of the few businesses blessed with being able to not only stay in business, but able to thrive. You know, and again, a lot of that had to do with the marketing we did. We were very, very aggressive in the marketplace, spreading the word of our loan opportunities. But yeah, we also had our best quarter ever in Q3 of 2020 . So
Mark, but it's not only the marketing, Mark. It's I mean, it's a reputation. You guys are out there. You've been out there a long period of time. You've been in front of the influencers in the real estate community. I know that for a fact here in Marin, very likely in the Bay Area. And like I said, you've been doing it a long time. So people know that they can come to you guys and they're going to get products, services, and trustworthiness that they, otherwise might not find out in that industry.
Thank you for that, Rob. Again, check
same with you, Rob.
PacificPrivateMoney.com and Guaranteed Rate, Rob Spinoza. All right, here's our thoughts for the day. I'm great at multitasking. I can waste time, be unproductive, and procrastinate all at once. You like that? and along those lines, teamwork is important. It helps to put the blame on someone else. I like that. I'm going to remember that. I wonder if that'll work with my wife, Hey, we're a good team, That means I get to blame someone else. All right.
Yep.
Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.